Hello and welcome back to Practice Excellence Live from your friends at Accounting Web. Today we're going to be talking about the tax legislation and tax legislation pipeline, and what's around the tax corner with two of the finest minds in tax. So joining us is our consulting editor, Rebecca Cave.
Hi, Tom.
And we have the Business Development Director of FreeAgent, Kevin McCallum. Thank you for joining us, Kevin. And thank you to FreeAgent for sponsoring the session. We'll kick off with an agenda. So we'll sling over to the agenda for today. So what we're going to be covering in this session. Obviously, tax legislation is a crucial part of being an accountant, and we're going to be looking at what the tax legislation pipeline actually is and why we should care about it. And then we're going to be moving on to the main part of the session. So we're going to be talking about the thorny issue of Brexit. We're going to be looking at the work of the OTS in tax simplification, and we're going to be looking at making tax digital, one of the hot and button topics for Accounting Web members. We're going to be getting a bit of advice on the panel about preparing for the changing legislative landscape, and we'll have some time at the end to answer some of your questions. On that point, a bit of event housekeeping, so things you need to know about the session. Hopefully we won't be having any technical issues, but if we do, then the sessions will be available on demand on YouTube a few hours after the broadcast. Questions. To ask a question to our panel, you can use the chat window to the side of this video. We will be answering as many questions as we can. Any we miss, we will be answering them as part of a follow-up article on Accounting Web that will accompany this video. There'll be a few supporting documents as well, which you can find under the chat video, and many of which you can access via clicking the icons. So you don't need to pause the video to access them. Any of you who've registered to view this session today, you'll receive a written write-up of today's session. Right. Now, in terms of the actual legislation pipeline, I'll start with you, Rebecca. So what is the legislation pipeline and how does it work?
Well, to make new tax legislation, nowadays we start with a consultation process. And sometimes the consultation goes through 2 or 3 different levels of documents. At the moment with Making Tax Digital, we have probably what is sort of the first stage of consultation. The ideas are quite broad. There's a lot of things up for grabs. Those documents are put out for general responses. Normally it's only the professional bodies and some interested firms that might reply to a consultation. But with something like Making Tax Digital, really affects the huge broad area of business, and almost anybody ought to respond to it. Once those consultation periods are closed, normally a consultation is open for 12 weeks, but sometimes the period is much shorter. Sometimes it's very much shorter, maybe a matter of days sometimes.
Why is that?
Well, how much time HMRC has to prepare the documents, how much time that the minister in charge has been given to approve the document before it goes out. If there's a change in ministers, if there's something that happens at the top of the government, which means that there's upheaval in another area, it may be that the particular policy point is not reaching the top of the pile to be approved before it goes out of consultation. And then the consultation period gets cut short because they want to make a decision on it at a certain event in the year, like the budget or the autumn statement. We're coming up to the autumn statement now, which is on the 23rd of November. So the consultations that we are out at the moment, some of them have closed, which were released in the middle of August. The Making Tax Digital ones close on the 7th of November. HMRC will gather all the responses to those consultations, do a report to ministers, and the minister will make a decision on where that policy is going. And then draft legislation comes out for consultation, normally shortly after the budget event or the autumn statement event. That goes for consultation. In this case, draft legislation is going to be issued on the 5th of December 2016. It's going to be open for comments until the 30th of January 2017, and then it will be revised based on the comments that have come in concerning that legislation, and then a more formal finance bill is released in around March after the budget. Then that passes through Parliament. There may be further changes made as the law passes through Parliament, and then finally the bill gets passed. It's called giving it royal assent, and it becomes an act, and we have some new tax law. Last year it was another 650 pages of tax law, and similarly I suspect the next one will be a similar length.
Yeah, we'll come on to the OTS's work in all of that in a minute. Kevin, in your role, you deal with hundreds, if not thousands, of accountants and business clients. Why should the legislation pipeline matter to them? Why should they care about it?
I think that there are so many different moving parts these days around, the convergence of kind of changes to use of digital tools. We're going to talk about that a bit later. The state of flux in the economy. There's a number of other things that we're going to talk about today, and most small business owners and small businesses will look to their accountant to help them navigate all the changing landscape that they find themselves in. And there's really a kind of role for the accountant in here to be a strategic advisor to these small businesses, to kind of explain, to translate these 650 pages of new tax legislation into something that means you should think about your business this way, you should think about your finances this way. And I think that it's important that people actually maintain currency and relevance in their understanding of these things, which is not easy because there's so many different things that are moving. Unless you're a tax expert like Rebecca, it's going to be difficult to keep on top of that.
That's correct, Kevin. There's a lot of different things to think about, and it's not just tax law, because the whole UK tax system actually changes with different influences as well. We have tax cases going through the courts all of the time, and when a tax case is decided at certainly upper tribunal level or higher, that forms a precedent, and it means that that decision needs to be followed by businesses and HMRC.
Are they always precedent then?
No, at the lower level, at the first tier tribunal level, that doesn't form a precedent. So if there's a decision that affects a particular situation at that level, HMRC like to say that things ought to be followed, but actually it doesn't form a precedent in law. Right. It's only if the facts get discussed at the next level of tribunal, which is called the upper tribunal, or it goes higher than that, the Court of Appeal, and then it can go up to the Supreme Court, which used to be called the House of Lords. Beyond that, it can go to the European Court. Yeah, so at present. So there's all those levels of court, and certainly some tax decisions go up to Europe and then come back to have the judgment considered by the UK courts. They'll be talking about very long-term decisions on very, very big issues, like how Marks and Spencers are allowed to use losses arising from subsidiaries in Europe. That was a situation that went up to the European Court and then came back down again to be written into UK law.
Excellent. The questions and comments are flooding in already. Very quickly on the consultation thing, Chris has asked, does anyone actually believe the consultations are actually consultations anymore?
Well, yes, that's a sticky point. There have been consultations in the past which were more insultations than consultations. That, is
that a new word, Rebecca?
I've just invented it. That HMRC would say, this is what we're going to do. Do you think it will work if we do it like that? Inviting a sort of yes, no, or why didn't you think of doing it like this answer. The consultations we have at the moment on making tax digital are certainly far broader than some of the consultations we've seen on the past on more technical issues. For example, we had a consultation on agents having to write letters to clients and sending leaflets devised by HMRC out to their clients. There was a consultation on that. It was very limited, and we weren't allowed to say we don't want to write these letters to our clients. That was a decided point. With making tax digital, there is far more to be decided. I think there is only it's going to happen, but all the other points in the consultations are up for decision.
I think that's part of the challenge, really, isn't it? That even to discuss this today is that there's quite a little amount of hard, incontrovertible facts that we're able to debate. So there's still a lot of conjectures, a lot of assumptions, a lot of things. And it is, we can talk maybe later about some of the other processes in a bit more detail that have gone on similar basis. But one can be cynical in these things, or one can be kind of optimistic in that. And the wider the population of people actually submit to this, the better, I think, in terms of the representation of views from multiple different stakeholders. We're certainly putting our response in, and I know there's many more people than would normally in these processes.
I totally agree. It would benefit everybody, every accountancy firm in the land and every business in the land, to respond with their 2 pennieth on making tax digital.
Excellent. We will be covering making tax digital. I think it's the third thing we'll be covering, so we're going out with a bang on MTD, as it were. But first up in this session, we're going to be covering Brexit. A small issue. I don't know if you chaps heard about this, but I will start with a health warning. We're not going to be covering the politics of this. We're going to be looking at what it means for accountants, their clients, now and in the future. The problem, and I found this as a problem as a journalist covering Brexit, and I'm sure accountants find this as well, it's just that we don't know that much about it, what form it's going to take. But what we do know, according to Pinsent Masons, we can anticipate that there'll be no direct changes due to Brexit to the tax system. Now, the original quote was until late 2018 at the earliest, but I think that was written before Theresa May's statement that Brexit, they were going to trigger Article 50 in March next year, so whether that's changed or not, we'll see. But we're going to be covering some practical things that we can think about and do. So let's start with what we know. Rebecca, I'm going to start with you. Would you be able to elaborate on what we know about the legislative process from this point on?
We don't know a lot, to be honest. We do know that they have promised, the government has promised, the Great Repeal Act, of which there is nothing much great about it. It will actually be a fairly short act, probably, to say that all aspects of European law which are currently active in the UK will be deemed to be part of UK law. So all this guff about removing red tape is totally rubbish, because it's all going to be completely written into UK law until some point that it can be repealed, because then they will gradually change or repeal little bits as they go. But in view of the fact that it took 40 years to write it all, it will take probably 40 years to unwrite it. So that's what the Repeal Act is going to do, and it won't happen, and it won't take effect until the point that we actually leave the EU. So the Repeal Act may be passed, but it won't take effect until the actual point that we leave the European Union.
Yeah, there won't be a huge change straight away. We won't see 2 years of complete tax overhaul as we go through the exit process. There's likely to be a, as you said, a very gradual process away. Is there an argument for greater tax flexibility?
There possibly is an argument. It depends what situation we end up in after we leave the EU. If we remain part of the EEA, we're going to be still constrained by the rules that the EU places on things like state aid. So, again, I'm afraid it depends.
So, a few areas to think about, practice issues, so from a client and a strategy perspective, Kevin. So, looking at the first tax and accounting areas that are likely to be affected. What have your partners at FreeAgent been saying to you?
The reality is that it's been a bit overshadowed, any kind of changes in that, in terms of being, panic stations haven't quite set in yet because there's just so little information to go on. And I think that we've got some more practical and short-term things to think about around we'll come on to talk about MTD and some of those other aspects. So I think it's one of those kind of, we have to wait and see, really, rather than jumping for the life rafts on day one. I think from a practical sense, we notice it from ourselves as a business, as we have a small but a number of non-UK passport holding staff who are great staff, and it's always an important part of any business is getting the right people to work there in a software company. That's we can cast our net very wide and bring in some great people from our VP of Engineering, Maria, for example, is from Spain, and a number of other people. So I think that's something for people to consider what the changes are going to be. And until there's a bit more, I think there's going to be protection for these employees that are here, certainly, but we just want to be sure that that's not something that's going to impact on that. But there's not been a huge kind of blood pressure rising in the profession that they're certainly getting flagged to us. Like we said earlier, I think the role of the accountancy profession in here is to, as and when information becomes available, is probably translate and educate and either reassure or kind of stimulate to action their clients to do the right thing and to act appropriately. Because, as Rebecca says, it's going to take, literally this is going to be measured in years rather than quarters or months in terms of any changes in these things. I mean, what VAT is probably the one that was most...
Yes, I mean, VAT, of course, is a European tax. And once we leave the EU, it will be up to the UK government as to whether they want to retain a VAT type tax. I mean, it's very likely that they will. But one of the key points is whether the judgments that have been made, the European Court of Justice on VAT matters, whether they'll continue to apply in the UK. And that's an unknown point. But what will be certain that once we leave the EU, any future European Court of Justice judgments on VAT will not apply to businesses within the UK. But sort of moving on from VAT, customs duties are often sort of categorised with VAT, and people in the UK haven't really thought about customs duties for many years. If your trade is with other countries in the EU, you don't have to think about customs duties at all. But customs duties are going to be a very, very big thing once we leave the EU. I've heard that the HMRC are going to have a whole new IT system to deal with new customs duties. And it could be very expensive for firms. I think this is one area where firms could start planning if they've got to look at their exporting profile, where they're exporting to, how they can assess the risks in those transport, physical and digital goods and services.
Albeit not knowing yet what the end state is going to be, from a point of view of EEA or not.
So sort of reassuring one's staff, keeping your business model reasonably flexible to try and adapt to the changes. How do you, Kevin, FreeAgent the business and FreeAgent the advisor to accounting firms, I mean, where do you stand on these issues?
I think it depends quite how apocalyptic this might be one way or another. Some of the stories that you hear about the loss to the revenue from changes in coming out of the EU could be significant, sort of between 30 and 60 billion pounds a year in lost revenues in these things. So will that affect the way that the revenue actually goes about collecting or the kind of changes? Or the flip side of that is the potential of the kind of SOP to some other non-UK businesses to come and operate here would be a reduction in corporation tax rates, and that would be quite impactful for any incorporated business in the UK as well, maybe a boon in some ways. So it's one of those, we'll kind of, we'll know a lot more, hopefully, in the near future, but right now it's difficult to advise people. Rebecca's right, people need to think about the risks, think about the possibilities, and think how you could insulate and insure yourselves from the kind of worst ends of that spectrum, but it's a difficult thing to do till we know more of the facts.
No, absolutely. We've had a couple of comments. Thank you for keep them coming. So Richard says purchase tax was so much easier. Jackie T says I remember customs duties, and we've got a question here from Michael. Thank you. We had a question from you this morning as well. Are there any VAT cases decided in Europe that you think are most likely to be reviewed?
I think I'll pass on that one. I can't think of any immediately.
If Rebecca's passing on it, I have no idea.
I'd have to come back on that one. I'm sure there are some.
Nothing to do with tea cakes.
The tea cakes wasn't a European judgment.
It's just my favourite one. I'm a big fan.
Well, tax is a complex matter, so...
there was something on solar panels, actually, which hasn't been implemented, that the EU made a judgment that the UK should make people who install solar panels charge standard rate VAT on the installation costs. At present, it's still, I mean, this is not just solar panels, it's any sort of energy saving type thing like heat pumps, ground heat pumps, air heat pumps. At the moment, the installation costs for that equipment is on the low rate of VAT, the 5% rate. EU judgment said no, it ought to be on the standard rate, and it should have been changed from the 1st of August this year. There was draft legislation, and it hasn't come into effect.
Did it just get snarled up in the pipeline? Or?
Goodness knows what's happened to it. I can't find what's happened to it, but that would be the kind of thing that might not happen if we leave the EU.
Okay, solar panels. I'm glad you could shed some light on that, Rebecca. Tax is a complex thing. So, another question in. What advice will you have for a client whose business activities are based in the EU in light of Brexit?
Again, it really depends. There's at least 5 or 6 different end states that we could end up being. I think the fallback positions, the World Trade Organization basis around cross-border trade, I believe, and I think it's kind of very difficult to say until we have a bit more information.
I think it also depends very much on the type of business. Some particular businesses, because of the area that they're in, need to be attached to certain EU institutions. For example, if you're a patent attorney, most of the work on patents is to do with the EU patent law. If you're a patent attorney, you probably want to be based within an EU country, because if you're based in the UK and the UK is not part of the EU, you're not going to have any work. So if you're a patent attorney, you're probably going to have to move your business into an EU country.
Let's say about some financial services and what have you, the kind of passporting that's going to go along with that. Or if you happen to own a bank.
Yes, banks, insurance companies, anything that is tied to particular EU regulations which requires the business to be located within an EU country.
Okay, fantastic. Right, well, I think we've indulged in enough wild speculation about Brexit. So moving on to section 2, talk a little bit about tax simplification and the work of the OTS, the Office for Tax Simplification. So I guess we've included this today because of their sort of promotion, if you like, to a statutory body in Finance Act 2016. Now, as I understand it, the government is still not obliged to actually listen to them. Do you think, Rebecca, that their increase in profile is a good thing?
It's certainly a good thing because they've now become a permanent body, and they're not just an experiment as they were first set up as sort of a trial. So maybe their views will be looked at and considered more by the government, but certainly the government is not obliged to listen to the recommendations that the OTS make, however well found those recommendations are. So although they do a lot of good work, it is ultimately up to the minister to make decisions on tax policy. So the OTS can only advise, unfortunately.
Do you think this, though, gives a rising in awareness of these kind of issues, the fact that the OTS exists at all? And I appreciate the fact about them not, the government not being obligated to take any of the recommendations. I mean, they have, as I understand it, taken on board about half of the 400 recommendations that they've made. So from that point of view, there obviously is some value in the work that they're doing. And if some of it's kind of raising awareness external to these corridors of power and the kind of tax experts and these things, that one would hope is a good thing.
Yes, I think it's a very good thing that they bring a certain sort of amount of academic rigour to looking at the various problems. Of course, there are academics who specialise in tax within the universities in this country as well, but the OTS have the advantage that they can go out and do lots of sort of face-to-face surveys and electronic surveys of businesses and accountants to find out how practitioners are thinking about particular subjects on the ground, and they gather a lot of very good evidence and they sift it and compare it and make good recommendations, and they can also sort of have sort of blue sky thinking on how structures could be changed, which is something they've been going along this sort of line, looking at the problems of structures for small businesses lately.
We talked a little bit about how fiendishly complicated the tax system is in this morning's session on small business tax. Is this something that you hear a lot, Kevin, when you're going out?
Absolutely, and I think that certainly from, tax is kind of, as you said, it's intrinsically quite complex. But I think, and it's not optional, as it turns out. But so I think that people have to deal with these things in some capacity. So from a FreeAgent point of view, from a software point of view, from day one, FreeAgent's been focused on the smallest businesses in the UK and actually about trying to simplify their relationship with tax and the relationship from a business point of view with tax, both them and the agents and accountants that work with them. And I think we do quite a good job of that. It's easy is really hard to do when it comes to these things, particularly something so involved in that. But it is. I mean, I think that I couldn't put my finger on any statistics to back this up, but I know that the two challenges that the HMRC have mentioned to us in other work we've done in the past is around failure to keep reasonable records and failure to keep enough funds to the side for their actual tax obligations. And a number of those are caused by lack of understanding rather than deliberate trying to avoid paying tax or anything like that. So I think it is something that people, it's a bit too hard. And whilst that is great because they can use the support of agents and accountants out there, and that means that everybody kind of has an opportunity to kind of be involved in these things, it does feel overly complex still in terms of what we do. So we are happy the OTS is trying to make some inroads in these things. And Emily, who was in the session earlier on this morning, has actually sat on a few of the consultative committees, and I know we've had some sessions with yourself and John Whiting, Rebecca, in the past about looking at self-employment and tax treatment on these things. So it's good to actually have a body like that who can do some of this petri dish stuff and think about it as well.
So how can they, I mean, in practical terms, how can they make themselves more influential?
It's difficult to know, really. I think if they make really sensible suggestions, and sometimes their suggestions are picked up. For example, cash accounting. This was something that the OTS suggested some years ago, and it was picked up by HMRC because it was presented as a way of simplifying the way that small businesses, very small businesses, could report their accounting results to HMRC. In fact, it was just codifying what actually happened. Everybody knew that very small businesses just worked on a cash basis anyway. So what the OTS was saying, well, just codify it and say they should be doing it on a cash basis, but we suggest it should only be available to businesses with turnovers of around 30,000 or less. But when it was implemented by HMRC, they put it in at turnovers less than the VAT threshold, which at present is £83,000. And now, of course, we have consultations to extend the cash basis to much larger unincorporated businesses and to landlords.
Yeah, there were two in the Making Tax Digital.
Yes, that's right. So although the OTS made a very sensible suggestion, they put caveats around it because they thought it was sensible not to extend such a treatment to larger businesses. But then HMRC grab hold of the idea, extend it and stretch it, so it's not really what the OTS had suggested in the first place at all.
Okay, we'll just take a look at some of the known projects that the OTS is investigating, one of which is around employment status. Now, in my notes I had IR35, but we've quickly added in a not after speaking to Rebecca. That's something that they were told not to touch. Is that correct?
Yes, I believe in the terms of engagement that they had when looking at employment status, they weren't allowed to look at IR35. But of course, that point came up in many of the consultations they had, round table, face to face, and in electronic surveys that people were talking about the issue of IR35 because employment status is obviously a key point in how IR35 operates or doesn't. But the OTS made various, what they were doing with their consultation on employment status was really sort of looking at the landscape and making various suggestions as to how things could be changed to move towards an easier situation. And some of the things that they suggested was, if there's going to be a statutory definition of self-employment, say, then that ought to apply across all fields of employment law and tax and possibly other regulations such as health and safety as well. So you've got one definition of employment and self-employment. At the moment we don't. It's not clear and there is no one definition. So you can be employed for tax purposes, not an employee for employment law, employment rights, and then again be an employee or a worker for health and safety. It's a mess.
And certainly there's there's a number of bodies out there that obviously that's a kind of very central tenet in what they're interested in trying to tidy up that mess. The people at IPSI and then to an extent the FCSA and these kind of organisations. It's certainly something that the practices that FreeAgent works with, that we have an awful lot of firms who have either a large proportion or pretty much all of their clients are in the contractor space, and obviously that forms such a central part of the service that they provide to their clients. It's so fundamental, the kind of deemed salary and the kind of employment status and contract reviews that have to go on to kind of make that in there. So I think that definitely the R35 is something, there's a whole other a whole other hour or more to be discussed around that, I would suspect. But I think it was something that you kind of can't go into that space, Rebecca, I think it's fair to say, without arriving at the IR35 discussion. Yeah,
I mean, they made their recommendations, the OTS made their recommendations, and they were put to the government, and the government responded, but the government decided not to act on most of the recommendations that came out of that report, unfortunately. So probably have to talk to the OTS as to how they might take that project forward or not.
But they're not involved in the public sector consultation, are they, as far as I understand?
They have commented, the OTS have commented on that consultation, but just as an interested body, in fact that they had a lot of work that they'd already done in that area, that they fed to feed into the consultation for public sector contractors. Which is again another fact that the practices that we work with and talk to, and the people that use FreeAgent are very, aware of and very conscious of as another concern around that.
Very quickly, because I'm conscious of time, but we've had a question come in from Michael again. Is it true they're looking at NI and income tax combining?
They're looking at not combining, which would be a merger, but aligning. So aligning the rules so that you have the same rules, say, on expenses and benefits for national insurance and income tax, and that is gradually moving towards that goal. Aligning the other sort of rules for the employed and self-employed, that's a bigger problem, but they are certainly looking at that issue. But I think the government said a few years ago, when the OTS started looking at this, that a merger was not on the cards, but they may align some of the rules.
Okay, right. Moving on from employment status then to company structure. In our sort of discussions earlier, you'd mentioned the look-through company, Rebecca. Could you expand on that a little bit?
This is an idea that the OTS have been consulting on over the beginning part of this year, to suggest that a small company may be a sort of look-through vehicle, transparent really, for tax purposes, so that instead of the company being taxed and then the individual being taxed on what they take out of the company, it is the individual that is taxed on the income that the company receives, but the protections of the company remain insofar as limited liability and the same sort of reporting calculations, obligations remain. So that's one idea that they're looking at for small businesses and have been consulting on.
Okay, and Kevin, I know we talked a little bit about the single enterprise with protected assets. Yeah.
And again, this is another potential status that has been discussed around these things, which is a sole trader effectively, but the assets such as the company, the personal home, would be protected in the event of a business failure. And I think that these kind of both of those, I mean, obviously there's not there's a ongoing compliance liability and burden still on the look-through company, which is a bit like we were talking about. I think it's the S Corp in the States, and or the other name for it, maybe some people have heard, is freelancer limited company, which some people have used. That again, that's something IPSI I think have raised a couple of times, and these things. And I think both of those would be of interest to these micro entities and these a lot of the very smallest businesses, because it does feel there's quite a jump. And whilst there's some tax benefits in being a limited company, there's other ways and means. And I think as long as it's still simple, then that people would actually be would be very interested in taking up those types of incorporation or those types of business to run their own business.
Okay, and to finish off on the OTS, you'd mentioned earlier they'd done a little bit of work around cash accounting. Is cash accounting really enough for companies, Rebecca?
Cash accounting is at the moment prohibited for companies. Unincorporated businesses can use cash accounting, companies can't. And the consultations which are out there at the moment are not addressing issues regarding companies using cash accounting, because companies have to abide by general accepted accounting practice, which is the opposite to cash accounting. And also, I would say that if you've got a business of any size, you're not getting the right information about your business if you're only looking at the cash in and cash out. I don't know what you'd think of that.
Yeah, no, I think you and I spoke about this a bit earlier on, and there's a kind of trade-off there about simplicity, and who's going to lose, who's going to win in these things. As Rebecca's quite right. I mean, obviously for incorporated businesses, not an option anyway. I think that there is a kind of streamlining that you could have for certain things, but somebody's going to win and lose somewhere. Without good advice, good understanding of the kind of what is right, what's wrong when you're actually applying your expenses in particular, then you're going to be struggling to get a real view on that. I mean, certainly from our point of view, we, FreeAgent's a double entry accrual-based accounting software, which is something that does give you all those benefits that Rebecca was alluding to on that side of things. So, the question is the level that they can go to, and obviously that's the other part that we've touched on already about the consultation, is whether there's an increase to the allowed level for MTD.
The turnover, you mean? Level of turnover.
Level of turnover, yeah. And also expanding out beyond to landlords as well.
Yes.
And how much has the work done by the OTS influenced the incoming MTD legislation?
Hardly any, actually, because the OTS wasn't involved in the consultations before they were formed for making tax digital. The OTS was consulting during the summer on where they should go, what sort of things they should look at next. But that consultation closed just before the MTD documents were released. So the OTS knew no more about MTD than we did before the documents came out. So they will be feeding in ideas just like anybody else will be. But I think this is one of the weaknesses in the whole system, the way the OTS is operating, is that it's not involved right at the beginning when the consultation on policy is drawn up. It only comes in at a later stage in the whole pipeline.
One would hope the spirit of simplicity and improvement would carry through to the final MTD outputs, but remains to be seen.
It does.
Wonderful. Right, that brings us on nicely then to making tax digital. Now, we had a whole 2 sessions on this on Monday, which you can catch up with on the Practice Excellence Live Hub. So we're going to be looking at it from a legislation pipeline point of view, looking at it, can it be viewed as a good thing? So looking at the lessons we've learned. Kevin, are there lessons we can learn from the automation of other industries or professions?
Well, I think there are. I mean, the way that things are going digitally, but even in the accounting profession, looking at things like the rollout of IXBRL back in 2011, 2011,
yes.
RTI, these kind of processes. And what that does highlight is that as and when the definitions and the milestones and all of the kind of final states that we want to get are clear and understood, then the profession and the software industry and the taxpayers and business community can all pull together and actually make this stuff happen. I mean, the number of payroll submissions monthly now going through RTIs in the 90%, and it's not perfect, but it's that those sides of the equation we've all pulled together very strongly to actually make this stuff happen. And the same with IXBRL, which was more of a software problem, I think, in reality, as it turned out, rather than being too exposed to the kind of painful requirements from the businesses and the staging, etc., as it was with the payroll side of
I
things.
think there are lessons for the accountancy profession and HMRC to learn from IXBRL and RTI, and certainly the lessons from RTI are not learnt or solved yet. I think the profession and the software producers did pull together, as you're saying, to help clients comply, and certainly IXBRL drove a lot of clients to accountants because they found that they could not submit their own accounts for their companies any longer.
Yeah, and I think that's one of the things that we would say that probably will come out of the Making Tax Digital initiative, is that there's a latent demand for accounting services from these smaller businesses who maybe are making do without at the moment. And we reckon there will be a number of these people. It may be the services change slightly to those that you're currently offering to your clients, but certainly there'll be a large number, and this is a very broad set of people at the bottom of the kind of business pyramid who will benefit from having some advice, some guidance, both transitionally and then thereafter, in terms of how they should actually benefit from these new rules and regulations.
They'll certainly benefit from having some guidance perhaps, but they'll also suffer because they'll have to pay some accountancy costs which they wouldn't have paid before, and software costs which they wouldn't have paid before. So certainly whether those costs are overridden by the benefit that they're getting for a little bit of accountancy advice is a debate to be had on another day.
Or now. And the software industry, though, I mean, I think that we would see certainly the move to cloud and the move to using online tools. I mean, there's a growing momentum of people doing that in any case.
Yes.
And that's been coming about in any case. And I think that, one of the things I was going to comment, there's been quite a lot of commentary around the fact that maybe the software developers are rubbing their hands in glee at the prospect of all the windfall that this is going to bring. But somebody like FreeAgent, which was founded, Ed Olien founded the business back in 2006, 2007. This was always the intention, was to make accounting be simple using online technologies. This was not, forecasting what the future was going to look like, and it was always about tax and simplifying not the tax, but the interaction with the tax and the way of dealing with tax for these smallest businesses. So it's not an opportunistic thing from the software developer's point of view. It's the fact that we will actually look to serve the requirements of these types of business communities and owners.
I understand that there are major concerns about the legislation, but Rebecca, can we make a case at all that MTD is a good thing for accountants?
I think it will be a good thing for accountants insofar that their skills and their advice will be needed to a greater extent than possibly at the moment for smaller businesses. The smaller businesses may not be happy that they are being driven into the arms of accountants. And it's got to be a good thing for the government and accountancy practices that tax will be made digital, that reports will be submitted, accounts and tax returns will be submitted in a digital fashion. The difficult point is whether you actually make legislation to determine exactly how businesses must keep their records internally before those reports are made, which is one of the main requirements of making tax digital, that it's going to get right into people's lives on a day-to-day, transaction-by-transaction basis, and say you must not write that down on a piece of paper, you must not write it in a spreadsheet, you must use some software which you will have to buy.
So Kevin, obviously there's a lot to work through. We're anticipating more in the autumn statement and or the finance bill. But are there other things that we can explore around MTD that we know?
I think knowing is that again, that's a difficult one, much as the other things we've spoken about today. I think you touched there on another conversation we're having, Rebecca, about how much of a consultation we anticipate that there'll be a lot more responses to this consultation than maybe there would be to others previously around these kind of topics. So there's quite a lot to work through from the consultation point of view. And one of the comments you had earlier on, though, was how much of, when you say consultation process, this is entirely about process and nothing about consultation. I'm not sure I'd share that view, but I think that it is something that's going to be interesting when that stuff actually is in the full sunlight as to how that actually the conversations run thereafter.
There's also a point. It's good to point out that we don't even have consultations that cover a large number of businesses yet, because the consultations that we have only deal with unincorporated businesses. They don't deal with companies. They don't even deal with complex businesses such as partnerships, complex partnerships. So we are expecting further consultation papers to come out, possibly in December, possibly in early 2017, to see how other larger businesses and complex businesses, and possibly even trusts who conduct businesses, will be able to comply with making tax digital and fit into the whole system. So the consultation process is not even halfway started, really.
There's a lot of lines to connect and dots to connect and things to colour in yet. So.
Yeah, if we could throw to the slides for a second. November 7th is when the consultation ends for Making Tax Digital. We've got the autumn statement on the 23rd of November. There's mixed views as to whether we're likely to see anything about Making Tax Digital there. Do you anticipate anything, Rebecca?
I suspect there will be some mention of Making Tax Digital in the autumn statement. I'll be very surprised if there isn't. However, the announcement might be, we're considering the consultation document, so we're not going to make an announcement yet. That might be the announcement. Because there's only a very short period. If you look at it, there's less than 3 weeks between the time that the consultation goes in and the time that the Chancellor gets up to make his speech. And then we have a little bit longer until the draft legislation comes out. So there may be something within the draft legislation to give an outline.
Yeah. There's some, I think, private beta testing going on at the moment.
There's quite a lot of conversations with software companies. We're involved in those, as are a number of other software companies, around the APIs, the ways that the data will flow back and forward. And it is two ways. That's another thing that's interesting about information in your digital tax account, actually being able to be accessed through software as well. So it's not just one way thing. So there's a lot of work, there's a lot of investment on HMRC's side. It was 1.3 billion or something that they've had allocated to this as an IT budget to make these things move forward. So there is an awful lot of dialogue, conversations, working groups around the software side to the beta, but that they've been quite explicit that they're not going to provide software as they have in the past. Yeah. So they are looking to the software industry to provide these beta versions of software that will be in use to test it.
They've mentioned a sort of memorandum of understanding, as it were, that HMRC are having with software providers. Is that something that you and other software providers you've been talking to?
There's both kind of one-to-one conversations and then more group conversations around the kind of development community. I mean, I think what we will see is that there will almost certainly be a raft of products that don't exist today, coming to market around the sort of simpler use cases and what have you in there. So, and I think the other thing that's interesting is HMRC have indicated that they will actually provide some guidance to taxpayers and to agents as to which software is good, and some ratings and in those kind of elements.
Well, I think that's another point that's up for consultation, actually, as how much guidance they will give. Because it's very dangerous when HMRC start giving guidance on what they don't know.
I'd agree with that, because also stuff changes so quickly these days. So the point is that and we went through this once with a previous record keeping application that they had with these things. But I think that the point is, I mean, we believe definitely and intrinsically it will be mobile. There'll be an element of kind of as much sort of simplicity and automation as we can will be the kind of end state in these things. I know that you and I spoke earlier on, Rebecca, about some of these nudges and prompts that have been touched on, and you'd be concerned that the software doesn't do a complete job on that, could be as dangerous as
I'd be very concerned about the quality of the nudges and prompts. I think there's a difference between prompts, which might sort of clarify whether a figure should be sensible in concern the figures that have been put in. For example, if somebody is recording a petrol expense of £30 a week every week, and then suddenly he enters into his accounting software £30,000 for petrol, then the software will probably say, are you sure? Isn't that 30? That is a sensible sort of risk assessment of the quantum of the figure. What the software would find it very difficult to do is to say, what are you going to spend that petrol on? Are you visiting clients with that petrol? Are you visiting your grandmother? Is it a private journey? Is it a business-related journey? And of course, that's almost impossible to do. You've got a tank full of petrol. It could be used for a number of things.
Although that's a challenge we face today with non-automated records as well, to some
It
extent.
certainly is, but it's not a solution that can be achieved by photographing your petrol receipt.
No, nor do we have magic wands, but I think we can bring some quite clever people to do quite clever things to help on that. I think it will remain to be.
Yes.
So the barriers to entry are going to be, as they've never been lower for software providers to come into new markets, barriers to quality and barriers to being able to support taxpayers and agents and accountants is going to continue to be quite high, we would argue.
In terms of the free software that's been mentioned in the consultations, now HMRC in the session on Monday clarified that it would not be available to agents who provide a paid-for service, as it were. But is that something at FreeAgent that you've looked at in terms of offering?
It's something we're having
software?
to consider as part of the consultation process. And I mean, the reality from a business point of view, I mean, is what is the way that these things are provided? What is the route to market that you're going to have on these things? And again, it's looking at the scope and spread of how many people are going to be affected by these things as well.
Yes, I think that's interesting that you mentioned route to market, because obviously software providers need to make a turn on the software that they're giving or selling to businesses. So HMRC have said that they will guarantee that some free software will be available. What they haven't guaranteed to say is that it will be the same free software available. So it could be that many software providers will provide free software for a limited period, and then various of them will drop out. So that free period will expire. So as long as there is still one product in the market that is free, HMRC will say that they have met their promise.
Yeah.
But of course, it may be a different product that is free every year. And it's very difficult for people to move from one product to another. At the moment, compatibility between accounting products is an issue.
That's not going to improve in the short term, I suspect. I think the other challenge with that kind of approach would be, as businesses grow and become of higher levels of requirements, actually moving up and having given people an upgrade path or a kind of growth path in these things will be quite important as well. Because a lot of newly incorporated businesses, like almost 500,000 new businesses, again we're talking limited companies in this case, incorporated every year, and must be more than that in terms of people being into business, particularly recently.
But many businesses do not grow.
True.
So they don't need an upgrade, but they will be forced to upgrade if the free version disappears.
Yes. I've not heard that as a suggestion, that as a way of resolving it is having a rota of it's your round from software to FreeAgent and Sage having it, kind of in the pub together. So.
Okay, so obviously there's a bit of a health warning attached to this next section because it is speculation, but I was just wondering if we could think about a few things further down the road that may be affected by making tax digital. So, for example, what could happen to payments under MTD?
Well, one of the drivers that the profession believe is behind MTD, but this is denied by HMRC, is to get people to accelerate their payments, the time on which they pay the tax. Now, HMRC has categorically said that the payment dates for tax will not be changed in the life of this Parliament, which means up to 2020. However, they would like people to make voluntary payments of tax more often, perhaps quarterly, to align with their personal digital tax account, which is magically telling them what tax that they may have to pay. So yes, the whole issue of when tax is payable will be subject to further consultation, we would hope. But actually making tax digital makes little sense on its own if the timing of payments is not also changed.
Do you think individuals really can do tax returns without an accountant under MTD?
I think we'd see the accountant and agent still performing and fulfilling a very important role in these things. Transitionally, it's going to be very important that people who weren't currently having to really do anything of these kind of things actually being supported in move into that. So I think it would be, we would certainly stop short of saying that would be the case right now. So I think super simple businesses in the future potentially, but I think that it's not something that we'd anticipate changing in the short term.
I think super simple businesses may feel as though that they'll be able to do their own reporting because that is the story which will be sold to them by HMRC, but then they may find that they're not claiming all the reliefs that are due to them or the allowances that are due to them. It will depend on the software that they're using and how capable they are of using that software. And then they may come a cropper because they're effectively paying too much tax because they're not claiming enough expenses.
Today we do know, and we do a lot of research and a lot of surveying and a lot of conversations with small businesses around that, and there's a general view that I'd rather somebody even checked my homework, as it were. So there's a real comfort factor in knowing that they've got somebody who's an expert, who's a professional, checking their work. It might be quite light in terms of the work that's done, but they just want that insurance policy, knowing that somebody who does know what they're doing are checking into that. And that doesn't make up an awful lot of the realm of services that a lot of firms offer at the moment. But that's what's saying it may mean the services actually change to some extent. And the advisory stuff becomes a lot more, and the kind of forward planning becomes a lot more.
I think it's probably going to make it more difficult for accountants because once the data is in and has been reported on a quarterly basis to HMRC, if that data is complete rubbish, it's going to be very difficult to unwind it and put it in a correct position.
They face that today, though, again, don't they?
Yes, but it's not reported quarterly why it happens. It's not reported until it's gone to the accountant. So the rubbish hasn't already arrived at HMRC. It arrives at the accountant's desk.
But there'll have to be capability for adjustments and amendments in any
Yes, but if
reporting.
the adjustments and the amendments mean a complete rewrite of the accounts from every transaction upwards.
You just resubmit it,
Yeah.
Okay, Kevin, what would you advise a sort of practice looking to sort of future-proof that, in an MCD perspective?
I think that the common thread to what we've been talking about today, but the kind of lack of defined and lack of clarity. So what I would recommend is actually keeping on top as much as you can. Definitely submit your thoughts around the consultation is in there. But I know for a fact that one of the most used pieces of material that we prepared for our accountant partners and it was put through on Accounting Web as well was a kind of plain English guide for what this means for the client. And the thing is that there's a lack of that kind of information out there for to pass on to your client and actually either assure, reassure, or just going to give some comfort to the fact that you'll support them through any transitions in there. It's not necessarily found its way out into the kind of general common understanding that there's some stuff going on there in the business community. There's a lack of any knowledge about it.
I certainly agree that there's been very little knowledge in the general business community about what is happening with Making Tax Digital because HMRC has deliberately not put the information out there for businesses. They've only been directing their messages really at the tax and accountancy profession. And when asked about this, HMRC has said, they're going to be doing some advertising in the spring. So that is after the consultation period has closed. So I think it's very important that accountants talk to their clients about this and try and work out how much it's going to cost their own practices to line up their systems for Making Tax Digital and how much it's going to cost the individual clients. Because it will cost clients. This free software will be available to some, but only the very simplest of businesses. So clients are going to have to pay for some software to keep their records and make quarterly returns. And this is one of the questions that is up for consultation. It's question number 42 in the main consultation document.
There you go. It's ingrained in here.
Yes.
Yeah, and you would absolutely urge
I would
everyone
urge
to go
every single accountancy practice to, if it's only one question that they reply to HMRC, question 42, how much is it going to cost your practice? How much is it going to cost each of your individual clients? And give the answer to HMRC.
Fantastic. Well, it's been a fascinating hour of facts and a bit of speculation. Thank you so much, Rebecca Cave.
Thank you.
Kevin McCallum. So, if you've missed part of it today, it will be available on demand over the next couple of days. You'll also receive a write-up from today's session. Keep looking at accountingweb.co.uk for more details. Massive thanks to our sponsors at FreeAgent for helping this session to take place. And yeah, any questions? Thank you very much for your questions and comments. And yeah, any ones that we haven't got to today, we will be answering in a separate article where you'll also be able to find this copy of this video. All that remains me to do now is to thank you very much for tuning in and wish you a very good day. Thank you.